Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. And in this video, I wanted to talk to you guys about understanding when to take profits and not getting greedy. Okay, the reason I wanted to make this video is because if you've been following the channel, you would know that we've been talking and covering some hot stocks lately, some hot asset classes that are doing very well and providing a lot of returns and a lot of gains in our portfolios. But it's very important to understand that, which we will cover here, that you didn't actually make money until you cash out. So making profits, taking profits, is extremely crucial in this game, especially when you're dealing with stocks that are running up so much. And I just thought that it would be important to talk about this, especially if you're just a beginner. It's very important information to have under your belt, okay? Trust me, I learned this the hard way over many times when I did not cash out and I did not take profits, and I paid the price for that, literally. So we'll talk about that. So the way we're going to structure this video is I'm just going to go over briefly with you guys this little write-up I made called My Profit-Taking Strategy. Very quick, very brief. I'm just going to run over some key points I have in terms of how I attack taking profits off the table right now. We will then go into a few examples of how I'm currently implementing that. So Moderna, again, if you're following the channel, you know that we've been covering this a lot. I'll show you guys how I'm attacking taking like reducing my position size and taking profits off this position, as well as a Riot position, which is currently doing very well. So we'll cover that, and then I want to show you guys an example, the initial example actually, of where I played taking profits completely wrong, and it taught me the lesson a very hard way. Okay, so this is Bitcoin. If you guys remember the Bitcoin rally when Bitcoin went up to $20,000 in 2017, I was early on that, and I made a lot of gains, but I came out with not a whole lot of profits, or at least not nearly as much profits as I would have liked to, okay? So we're going to talk about that at the end, just give you guys a little lesson, let you guys know how I learned this the hard way, and yeah, this should be a solid one, okay? So again, before we get into this, as always, I would really appreciate it if you guys gave the video a like, if you get any value from this video, and I'd appreciate it if you subscribe to the channel as well if you're not already, and if you are, thank you very much. Okay, so that said, let's get into my profit-taking strategy. I'll reiterate this once more. Always remember, you didn't actually make money until you cash out, okay? So again, gains are great, but you need to take profits and realize those gains, okay, if you want to actually make them tangible. All right, so another little preface here. This applies to stocks and assets that are seeing very bullish run-ups, okay? So like Riot, like Moderna, like some of these other stocks that we talk about here, and that you believe will continue to climb higher. Okay, so exact same thing applies to like Moderna and some of these other stocks, all right? So it's very simple. For every 10% that the share price runs up, I take 5% off of my existing position. Okay, so if the share price, say the share price is $100, just to make it easy math, if it goes up 10%, if it goes up $10 from there, I'll take 5% off of my existing position, okay? And I'll show you guys that more in depth when we look at the chart behind here, but I just want to cover these pros and cons really quick, okay? So the pros, one, you get to reap the rewards of the gains if the stock continues to climb. Okay, so yeah, if the stock is running up, if the asset is running up, you're still making profits, right? You still get to reap the rewards if the stock continues to climb. The far majority, actually, you're only taking a small amount off of your position doing this process. Again, this is only my process, you guys. It's always good to create your own process. There's probably something that could be better for you individually. I'm just letting you guys know what I do personally, all right? So you still get to reap the rewards if the stock climbs. That's huge. Two, you'll have extra cash on hand to reinvest in other assets that you're confident in, okay? So this kind of plays into the video I just uploaded, the last one I uploaded, talking about diversifying your portfolio, okay? And how important it is to have a diversified portfolio. No matter how bullish you may be on a space, it's always good to have other assets and other asset classes in your portfolio, okay? So you take some of the profits from a sector that's been doing really well for you, and you reinvest those into other sectors that you're confident in and may not be seeing so much love right now, but you think will see love in the future, okay? So you can use those profits to diversify your portfolio more and make your portfolio stronger as a whole, okay? Three, you won't be hit as hard if the stock or asset happens to see a down day, okay? So we'll talk about this in Moderna again. This just happened to us literally. But again, it didn't hurt me as bad because I have been implementing this profit-taking process, okay? So again, it still hurts, but if you are taking profits, it doesn't make you feel nearly as bad, and it makes you feel like you're more active. It makes you feel like you're more solid. Even if you did lose, you still feel better about the fact that you took a little off the table, you managed your risk, and that's really what all this comes down to, guys, is risk management, okay? So it's just giving up those little bits of gains and taking those profits that might pay off, but at least you're taking some off the table. At least you're realizing some of those gains you made and making them tangible. Okay, so the cons, I only got one here. You will see slightly less gains if the asset continues to run up, but trust me, it's worth the peace of mind that this will bring to you. Okay, so you see I made this con into kind of a pro at the end there. Again, you'll see a little less gains if you take 5% off. 5% is not much. You will still see the far majority of your gains when you implement this. Over time, it does compound. So if a stock just keeps going up over time, say you took off like 25% off your position, or 30% by that point that it's just blowing up. To be honest, and trust me, just from experience, it feels you're not going to make as much, but you took the risk off the table. You sleep better at night, and that's so worth it. Like, just the fact that it's not as stressful, and that's something so important to establish in this game. Like, you don't want to be stressing all the time. It's so much more, again, you just sleep better at night. It's so much more, it's so much easier just on your body and your mind if you do take some of these profits off the table and take some of the stress off of your back. Okay, so that said, that's just the gist of it. And then now we will run through again, some of these stocks that we've been dealing with lately, and I'll show you guys how I've been attacking them. Okay, so as you guys know, Moderna we have right here. We got in a couple months ago. We'll just say around this area. We entered around like $28, $30, right? So on the way up, this is when things really started gaining momentum. Again, they had momentum since like February, late January even maybe. But we really started to see momentum here over the past 2 months, okay? So, and I've been saying this along the way. I'm just kind of reiterating it, and I wanted to make a video about it just because, again, it's so important to take profits. All right, so right here we saw it was at like $30. We saw this huge run up. So say after, again, $30 to like $40, that's actually a 25% run up. Okay, so if it goes up 25%, I will then take about 10% off of my position. Okay, and again, right here, it went down a little bit. Again, because I took some off of my position, I don't feel as bad when we saw that correction from like $48 to $44. Okay, not very big because it did end up running up again. But again, this is just to reiterate, for every about 10%, and again, you can mess with this number a little bit, whatever suits you best. This is just what I've found, especially in these recent times, and what I'm still implementing to this day. Literally just today I did this, is for every 10% the stock moves up, take just 5% off of your position, okay? And again, right here, we look at this drop Moderna just had recently, okay? Saw this huge day, and then see when we had this move up, when Moderna was up like 25, 30%, crazy, I was like, okay, I'm going to take a little bit of profits off here. So it went up 20%. I took off 10% of my position, and it went and got crunched the next day, okay? So again, I still took a loss, but because I realized some of the profits up here, it wasn't nearly as bad, and I didn't feel as bad because I made the right decision the day prior to take a little bit of profits, okay? So even though I lost, I still feel good that I made the responsible decision to take some of the profits off. All right, same with Riot, okay? So this one just keeps running up, and this is like the same thing I'm doing here, okay? So on each of these significant moves up, I'll take 10% off of my position right here, 10% off right here, you're like 5% off right here. And again, you do have to play with the momentum of the stock and how confident you are the stock will go up. You can take more at times when you feel like something has reached the peak. So we'll just go right into Bitcoin, because I want to show you guys, I really want to run you guys through how I went wrong, just so you can apply it, just learn from the mistake I made, and I'll just try to rationalize how I came up with this kind of overall thesis of taking profits, okay? So Bitcoin, again, 2017, we saw that $20,000 bull rally when Bitcoin hit 20K. Crazy times. So I got in actually around May of 2017. So that was actually way like back here. Yeah, Bitcoin was around $2,000 when I got in, okay? So we'll call it 2000 just to be easy. It was around this time, exactly 3 years ago. Okay, so that's when I got into Bitcoin. I heard about it on Joe Rogan's podcast. The guy was on there kind of preaching it. And I was like, this is super interesting. I'll get in. So I took what at the time was a pretty solid position for me. I was obviously a younger trader. But it was a solid position in my current portfolio at the time, okay? So it took a solid position, meaningful amount of money to me, put it in Bitcoin. It just pretty much kept going up, except for right here. There was some obviously off and ons. It was slow. But then we saw the momentum pick up, okay? And you can recognize this in some of the things that we're talking about right now. Again, I've been saying how Moderna and Novio, some of these vaccine companies, it feels like a bubble. It feels very bubbly to me, okay? Based on strictly on the charts, again, vaccine is a very important thing to this world and to the human species as a whole. But the charts themselves, the stock prices do feel bubbly to me, okay? And yeah, again, when things really pick up momentum, that's when things get exciting, yet scary too. And that's another reason it's very important to take profits, is because, especially if you're younger, especially if you're new to this game and you got onto a hot stock like right off the jump, you got lucky, and you did spot it right, but you know, there is luck always involved in this game, even if it's just a little bit. Okay, so you got lucky, you're seeing all these gains, you're like stoked, you never think the thing can fall until it does. And until you see spikes like this where, and this is kind of the fallacy right here, okay? You see a stock running up, there's so much momentum behind it, so much cash flowing into it, it just keeps running up. You think it can't go down, okay? And that is a fallacy, okay? Because it obviously can go down. Nothing goes up forever. What goes up must come down, all right? So we saw this crazy run up. I was just seeing my cash like pile in. I was making so much money for what for me was so much money at the time. And I was so stoked. And then we saw it hit 20K, okay? And 20K, another good example, always remember that very round numbers, so 10,000, 20,000. Did we see a pullback at 10,000? Not really, honestly. Once it passed 10K, it just was kind of off to the races. But 20,000, very even psychological number. Always remember that, you guys. Round numbers are psychological numbers that you have to be careful around. So an example, Moderna, if Moderna was to hit $100, I'd be careful around that region, okay? Just because it's a psychological number. So just keep your eye on that too. But it hit 20K, and then within the span of, what is that, like a week, it went from 20K down to like 12K. Okay, so it immediately got nearly cut in half, and that hurt so bad. Again, I was younger, I was less experienced, but it hurt so bad because I didn't realize the gains up here. And obviously no one can ever call the top. You can never call the top. That's impossible. If you knew exactly when to call the top, you'd be a very, very rich man. Or woman, that is, to all of you females out there watching. But yeah, it's just so hard to call the top. No one can call the top, but that's why it's important to just take profits along the way. So even though you might not realize all the gains up here, again, even if you were just taking 5% off of every move up, significant move up here, you still would have made more than if you waited until the stock crashed, okay, and then even took out. And this was hard for me too, especially learning. When I actually cashed out a good amount of my position, again, I still hold a lot of the Bitcoin that I've held from this time, okay? So I'm a long-term Bitcoin bull. I do believe in the long-term prospects of Bitcoin, neither here or there, but I ended up selling a lot of my position around $11,000. So again, from 2,000 to 11,000, I still 5x my money pretty much, but I did not 10x my money, which is very significant, especially for me at the time. Again, when you're playing, when you're just getting started, and I was a fair way into my trading career at this point, a couple of years under my belt, but this was, again, I'm so much more mature of an investor now, and that's what will happen with all of you. As you mature as an investor, you do realize these things and understand how to manage risk, and that's really what this all comes down to, is you guys just manage your risk. Don't get greedy. Do not hoard those gains, because again, those gains don't mean shit until you realize those profits, okay? So just realize those gains, you guys, and that's kind of the gist of this video. I don't want to just rant on too long about this. I'm sure you guys got the point. If you guys do have any questions about this, feel free to drop them below. I'm happy to answer any questions or concerns about this you may have. Let me know what your strategy is if you do have a profit-taking strategy. Again, this is just mine, not investment or financial advice, of course, as always, but this is just my take. Hope this helps you guys out. Again, if it did, I would really appreciate a like and a subscription if you're not already. With that said, also check out the links down in the description if you're interested in helping me help you. I really appreciate that. It really helps support the channel a lot and encourages me to make more content like this. Okay, so we'll call it there. Again, gonna stop rambling. As always, you guys, until next time, take action, make waves. Peace. All right, don't be greedy.